Over the past century, the cost of authoring written content has remained relatively constant in real terms. However, in the past 2 years, as the quality of large language models, LLMs, has improved, the cost has plummeted. The impact of AI is expected to be dramatic. It's such a fast-growing industry that forecasters are often left scrambling to keep up. In 2020, it was predicted that we would reach some form of general artificial intelligence within 50 years. As of 2024, that estimate has shrunk to just 8 years, reflecting an 84% decrease in only 4 years. In this video, we will explore the full impact AI will have on the economy in the coming decades. Building on years of progress since Google invented transformer architecture in 2017, ChatGPT catalyzed public understanding of generative AI. No longer just a tool for developers, ChatGPT's simple chat interface allows anyone speaking any language to harness the power of LLMs. This widespread use case led to ChatGPT's rapid rise to 100 million users in just 2 months, outpacing even the fastest-growing social media platforms. This swift adoption highlights the immense interest and potential of AI technologies in both consumer and enterprise settings. In 2023, the corporate world has taken notice. Since the introduction of ChatGPT, the number of AI mentions in earnings calls has tripled. This surge reflects the growing importance of AI in strategic business planning. Coding assistants like GitHub Copilot and Replit AI are early success stories that have boosted the productivity and job satisfaction of software developers. AI-powered assistants are enhancing the performance of knowledge workers. And interestingly, they benefit underperforming workers relatively more than high performers. This leap forward is akin to the revolutionary impact of the iPhone, setting the stage for an unprecedented boom in productivity. With knowledge worker productivity potentially quadrupling by 2030, we could see record-breaking growth in real GDP over the next decade. With larger training data sets and more parameters, GPT-4 outperforms GPT 3.5 significantly. Foundation models are increasingly becoming multimodal, supporting text, images, audio, and video. They are not only more dynamic and user-friendly, but also more performant. Overall, the data highlights the rapid progress and potential of advanced AI in handling a broad spectrum of tasks. 8 years after researchers at the University of Toronto introduced the first modern text-to-image model, the output from image models now rivals that of professional graphic designers. A human designer might take several hours and charge hundreds of dollars to create an image, like a herd of elephants walking across a green grass field. Text-to-image models can produce the same graphic in seconds for pennies. Professional apps like Adobe Photoshop and consumer apps like Lensa and ChatGPT are integrating image models into their products and services. AI training performance is improving rapidly due to innovations in training, inference, hardware, and model designs. The performance gains are driven by several factors: Moore's Law, accelerator optimizations, and algorithmic optimizations. Key innovations include reinforcement learning from human feedback, RLHF, in Llama 2, optimized prompts that outperform human prompts by over 50%, speculative decoding that speeds up inference by 3 times on certain models, and Flash Attention 2, which results in a 2.8 times training speedup in GPT models. These improvements result in more than a 5-fold increase in performance from 2023 to the 2024 forecast. According to Wright's Law, improvements in accelerated compute hardware are expected to reduce AI relative compute unit (RCU) production costs by 53% per year. Additionally, algorithmic model enhancements could further lower training costs by 47% per year. This convergence of hardware and software innovations is projected to drive AI training costs down by 75% annually through 2030. The charts illustrate these trends, showing a significant decline in both AI training hardware and software costs as cumulative RCUs produced increase. This rapid reduction in costs will make AI training more accessible and economically viable, fueling further advancements in widespread adoption. As AI use cases scale up, the focus is shifting from training cost optimization to reducing inference costs. Inference costs are decreasing at an annual rate of approximately 86%, which is faster than the decline in training costs. For instance, the cost of inference for GPT 3.5 Turbo is now lower than it was for GPT-3 just a year ago. Notably, the cost per 1,000 tokens for GPT-3 dropped from 6 cents to $0.012, and for GPT-432K, it fell from 8 cents to $0.007. Additionally, GPT-4 Turbo, with an expanded context window of 128K tokens and a speed of 44 tokens per second, shows a 92% annualized cost decline. This trend highlights the increasing efficiency and economic viability of deploying AI at scale. The open source community is rapidly closing the performance gap with private AI models from companies like OpenAI and Google. Open source models, championed by Meta and supported by contributions from China, are democratizing access to advanced AI capabilities. The performance of open source models is improving faster than that of closed source models, particularly in 5-shot MMLU, massive multitask language understanding performance. GPT-4 performs significantly better than the average human on standardized education tests, from the SAT to the advanced sommelier exam. However, it still lags human-level capability in common-sense reasoning, as measured by Winogrand. Stanford's framework, Holistic Evaluation of Language Models, HELM, is one of the most comprehensive, continuously updated evaluation methodologies, having tested over 80 models against a combination of 73 scenarios and 65 metrics. As open-source alternatives emerge and costs decline, software vendors tailoring AI to end-use applications should be able to monetize them more readily. Conversely, simple generative AI applications are likely to commoditize rapidly. The data illustrates this with a comparison of value capture rates across various enterprise software solutions. Business email and email marketing solutions show low value capture under 5%, indicating they are more commoditized and horizontal in nature. IT service management and CRM solutions capture slightly more value, but still less than 10%. Higher up the scale, IT incident response, smart transportation analytics, and cloud-based security platforms capture between 10% and 20% of value, showing greater differentiation and specialization. Verticalized, highly differentiated tools, such as those used in autonomous ride-hail services, can capture over 20% of value, demonstrating significant pricing power and market potential. Artificial intelligence has the potential to automate most tasks in knowledge-based professions by 2030, dramatically increasing the average worker's productivity. Software solutions that automate and accelerate knowledge work tasks should be prime beneficiaries. The AI total addressable market in 2030, based on varying productivity uplift multiples and value capture percentages, ranges from $700 billion to $37 trillion. For instance, with a 2.5x productivity uplift and 1% value capture, the market is valued at $700 billion, whereas a 6.5x uplift and 20% value capture push it to $37 trillion. The impact of AI on software growth is significant, with compound annual growth rates, CAGR, projected to increase substantially. A 2.5x productivity uplift results in a 34% compound annual growth rate, while a 4.5x uplift sees a 46% compound annual growth rate, and a 6.5x uplift reaches a 54% compound annual growth rate. By 2030, the market for AI-driven software solutions is forecasted to experience a major boom, driven by the widespread adoption and integration of AI technologies in knowledge work. If you're interested in having instant alerts on the most popular AI stocks such as NVIDIA, Microsoft, or Google, check out our app Stock Alarm. You can create custom alerts such as push notifications, texts, or calls on a variety of market triggers like price limits, price changes, recurring price alerts, trailing stop losses, volume spikes, 52-week highs, and earnings. Also, we would like to thank the ARK Invest team for the hard work behind this research and analysis. You can find links to both Stock Alarm and ARK Invest in the description.